Good morning and welcome to Market Cafe here on ET Now with me, Lisa Fernandez, and this is the show where we take you through all that's trending on the international as well as the domestic front. And with me, I have Snehi, who's looking all lovely in Indian. Wish you a very happy festive greetings to all you viewers as well as you, Snehi. And hope I'm wearing green. Hope it manifests for the Indian market as well. What says Snehi? Is it looking good? And will it match the color that I'm wearing?
Well, it looks like that. You can see implied
bright.
open in the green. Let's see, how things pan out for us this morning. Yesterday's Motor trading session was a nice one to have. So let's see how it pans out for us this morning. Looking positive. Let's see where it goes today. So good morning to all our viewers and festive greetings to all of you all as well. Let's start by looking at the global handover then, and let's start by looking at the US markets. Now, US stock futures inched down Sunday night after Moody's Investor Service lowered its US credit rating outlook to negative from stable. Moody's on Friday underscored the US very large fiscal deficit and partisan gridlock in Washington as contributing factors for the downgrade. We'll obviously talk about this in detail later in the show. Now, the major averages are coming off their second consecutive week of gains. The S&P 500 rose 1.3% in the week that went by. The Dow and Nasdaq gained about 0.7 and 2.4% respectively. Nasdaq, you saw some sharp gains coming in for Nasdaq last week. And on the economic data front, investors will be keeping an eye on October's monthly federal budget as well as the Reserve Bank of New York's October Consumer Expectations Survey. So that's the handover largely coming in from the US markets. Even when we look at Friday's intraday moves, you've got the Dow that closed up 1.1%, S&P 500 1.5%, Nasdaq a solid 2% uptick coming in just on Friday's intraday session as well. So strong handover coming in from the US markets. Shifting focus to Europe, then Europe markets pulled back on Friday after US Fed Reserve Chair Jerome Powell said that the central bank is not confident it has done enough to rein in inflation. Now, the Pan-European Stock 600 index closed 1% lower. Food and beverage stocks led losses, ending the session 3.1% lower as all sectors closed in the red except oil and gas, which added almost 0.5% to gains. Even when you look at European indices on Friday's intraday move, DAX was lower 0.7%, FTSE also closed lower 1.3%. So, we're getting very strong handover from the US, but it's the exact opposite when we look at the handover coming in from European markets. But Lisa, that was the global handover in terms of equity. Tell us what crude has done over the weekend.
Yes, so crude, if you look at the Friday prices, they had declined, and that actually it set for the third consecutive fall for crude prices. If I look at the crude prices right now also, they are down. Oil WTI crude is down around 0.7%. Brent crude is down around 0.7%. Brent crude is trading at around $80 per barrel, and it's mainly because of the demand pressures, the supply issues that was there from the Israel-Hamas war. But the demand pressure is also coming in from China because it's said that the weak China economy data that along with the refiners in China, the largest crude oil buyer, they have asked for less supply from Saudi Arabia from December month. So that adds to some demand concerns. So that is why we can see oil prices, they are trending downwards. But if you look at gold prices, gold is hovering up. It's around 1,943 per ounce, and that is because of Powell's hawkish remarks that has pushed the price is steady for gold, Snehi. That's the word coming in for the crude as well as the other commodities check.
Absolutely. Now, we do have a truncated week ahead of us, but let's still take a look at all the cues that you need to be keeping on your radar for today as well as for the rest of the week then. In terms of data, today you've got the India trade data as well as consumer price index data. That's the CPI inflation data, so keep an eye out for that. Tomorrow, the markets are closed on the account of Hindu New Year and Diwali, so we'll have a market holiday tomorrow, but we also have the WPI data coming out tomorrow as well. Worldwide markets are open, so let's take stock of what's going to happen worldwide as well. On the 15th of November, you've got the UK CPI data coming out as well, and moving on, then you've got, when it comes to US, you've got on the 14th of November, you've got CPI, 15th November PPI, and 16th of November, you've got the initial jobless claims as well as the industrial production data coming in. Lots of data heavy indicators coming in the next 2 or 3 days, so keep an eye out for all of these data points. Moving on, then let's take stock of the earnings season then, and you've got among the Nifty 50 companies today, you've got Grasim Industries that will be reporting its quarter 2 numbers. That stock will be in focus on the back of that news flow and its earnings. So keep your eye on that stock as well. And when it comes to corporate action, then you've got Anant Raj will be mulling fundraise. You've got the lock-in period that ends for LIC today, as well as Concord. For LIC, it's 20% equity, and for Concord Biotech, it's 3% equity. So both these stocks will be in focus on the back of that as well. And well, tomorrow you've got India Bulls Housing Finance. The board will be meeting to mull issue of bonds. So keep an eye out for that counter as well. And on the 15th of November, you've got Good Luck India. That board will be mulling fundraise. So keep an eye out for all of these cues today as well as for the rest of the week.
Yes, and let's look at what the Asian market is doing. So if I look at the Asian market, it's quite mixed. If I look at Nikkei, it's up around 0.5%, and even the Japan's wholesale inflation data has come out, and that has slowed sharply. If I look at the wholesale inflation, that has sharply slowed down from last month, and it's a sign that the cost pressures are gradually cooling. So that is actually showing reflecting on the market as well. Kospi is also up. It's flat actually, but it's trading on a positive bias, and even Hang Seng Index, it's up around 0.4%. But what's trending in green, in red, that's the ASX as well as Shanghai, Shanghai is down around 0.2%, while ASX is it's down around 0.1%. So that's what the Asian markets are currently doing. But but if I look at GIFT Nifty, it's our Nifty closed at around 19,525, and if I look at the implied opening, that is at around 19,558. So it's quite muted opening, it suggests, for our Indian markets, Nehi.
Absolutely, Lisa. Let's shift focus to what's happening around the globe, and let's start by looking at some somber news that we're getting from Gaza, because for the first time in the history of recent wars and conflicts, the world has lost contact with war-stricken Gaza. More than 11,000 Palestinians' lives have been lost in Israeli attacks. We don't know about the latest body count, since the key hospitals in Gaza have lost contact with the outside world. However, the death toll from Hamas's attacks in Israel has been revised downwards to 1,200 from the earlier 1,400 that was reported. Now, two of the largest hospitals in Gaza have both shut down. Israeli snipers continue to fire at anyone near the Al-Shifa hospital, trapping thousands of people inside. The WHO Director General has warned of a dire and perilous situation in the hospitals, saying that more patients, including premature babies, are tragically dying. Meanwhile, Hamas has denied it has refused 300 liters of fuel from Israel intended for medical use at the besieged Al-Shifa hospital.
And US President Joe Biden as well as Chinese President, they are gearing up for the high-stakes meeting. This will be the second face-to-face meeting since Biden took over as president. And as the two leaders will seek clarity in the long-standing relations between the nations, a slew of issues are likely to be discussed. And this is ranging from the Israel-Hamas war, Taiwan war, as well as the Ukraine in the election interference.
Well, let's take stock of what is weighing on the US index futures then, and Moody's has cut its outlook on the US credit rating to negative from stable on the back of the costs related to the rising interest rates. Moody's has also said that the continued political polarization in the US Congress has led to concerns that the lawmakers will not be able to reach consensus on a fiscal plan to show the decline in debt affordability. However, Moody's has stopped short of cutting the credit rating on the US government debt and retained it to AAA. Remember, earlier this year, Fitch had lowered its rating from AA plus to AA plus, from AAA. Moody's is now the only agency among the big three which has retained the AAA credit score on the US government.
And rating wars, they don't end here for the US. The country's banking sector is not out of the woods, and that Moody is saying, citing reinflation as a risk if the banks fail to predict rate moves and realign their portfolios. Now, the outlook for the sector, that continues to be negative since the collapse of the Silicon Valley Bank.
Well, let's look at some positive news back home then, and it's yet another victory for Team India. They're 9th in a row in Bengaluru as India blow away Netherlands by a massive 160 runs in their final group game. Centuries by Shreyas Iyer and KL Rahul powered India to 410 for 4 batting first. Netherlands in response could only manage 250 runs. Now what's interesting about this game is that we saw a lot of role reversal, and a successful one at that. We saw top Indian batsmen Rohit Sharma and Virat Kohli show their magic with the ball, and they each took a wicket as well. Now India will now face New Zealand in the first semi-final here in Mumbai on Wednesday.
Cricket commentary to market commentary. While it was a steady year for the large caps in somewhat to 2079, it was actually the small cap space which saw plenty of action. But how will somewhat 2080 pan out? Will it turn out to be a case of boom or burst for the broader market? And where should you park your funds? Let's listen in to the biggest market voices.
Right now the prices are slightly elevated, as are our emotions. But it's also justified. So if things do work out in the coming election and no accident happens in the world geopolitically, I think it's a decade of very, very strong growth ahead for us. The over-exuberance I find is really in the small cap SME exchange. There's something crazy going on there. And I think it's some accident waiting to happen. The small caps have gone up, but it's not large enough to damage sentiment for the whole market. Because normally you used to see some very, very large player or very large company blowing up. And that leverage leading to trouble. You don't really see signs of that.
Across small and mid caps, I don't see any value. And I mean, if you look at 100 companies, maybe 2 or 5 will appear to be reasonably valued. I would say 90-95 of them, even the good companies, are not offering value. So I think the long-term outcomes of investing in this space, I think, will be mediocre at best.
Markets are already going through that time correction in a broader market, not in the small and mid cap, but in the broader market. We spoke, Nifty has not given 5% return, and we are in the midst of a big bull market, right? So there will be a time correction. I don't expect that any 30, 40, 50% of correction, unless there is some black swan event, there is big political instability in 2024 election, or something globally really goes wrong, world war kind of thing, so that is impossible to predict.
Last 6 months, 1 year is mind-blowing. I mean, like index has done 8%, median is smaller than 20%. So that excitement brings all the crowd into following. In fact, after 20% return, you should run from there and go to the large cap. Because large cap is going to do that next 20%. Now mid cap and small cap had their breathing up. Now they have to breathe down. Large cap had done their breathing down. They have to breathe up.
Clearly, the mid and small cap funds have done extraordinarily well in last 3 months, 6 months, 12 months, but that should not be extrapolated. Our mid and small cap funds may have delivered 25-30% over the last few months, but you cannot expect 25-30% every year. You have to look at the long run range, long-term track record. As of now, purely from a valuation perspectives, large caps clearly look better than the mid and small cap at the index level. But of course, as I mentioned earlier, the trick is in the stock picking.
And that was the Market Voices experts talking on the outlook for large caps as well as small caps. So with that, let's slip into a short break. But as we step into a new somewhat, ET Now, we bring you a whole host of market insights to decode what's in store for the new year. So this Diwali, get ready, taiyar hokar aaiye, and stay tuned for a very special programming.
Hi there, welcome back. You're watching Market Cafe. Thanks so much for staying tuned. Now, future retail will likely be liquidated as lenders have voted against the Space Mantra's bid and no resolution seems to be in sight for now. Ankur Mishra joins in with all the details on this. Ankur, good morning. What are you picking up?
Yes, future retail is indeed heading for liquidation as we learn that RP has already filed at NCLT for initiation of liquidation against a company. Now, this has happened because under the CIRP process, there were several bids which were invited by the company, but finally only one bidder turned up, and that was Space Mantra. Although in the EOI stage there was a participation from Reliance Retail as well, but in the final bids there was only one bidder left, that is Space Mantra. The plan which was presented was in constituent of rupees 550 crore bid, and that was against the total debt of more than rupees 19,400 crore. So the lenders found that this bid was not viable for the CIRP, that is the insolvency process, and hence now initiation of liquidation has happened. It is up to NCLT when they decide for liquidation, but all in all, lenders want liquidation of future retail.
Well, Morgan Stanley has initiated a tactical note on two stocks, that is Page Industries as well as Aditya Birla Fashion. So let's look at what's in their note. So they are bullish on Page Industries, and they have given an overweight with a target price of 43,814. While for Aditya Birla Fashion, on the other hand, they are underweight with a target price of 176 per share. What they are saying for Page Industry is that the share price will rise in absolute terms over the next 60 days. But the demand, this is considering that the demand had remained weak in Q2. And following more on the silver linings from Q2, they said that management is not confident of losing the retail shelf space, as well they have given a margin, strong margin of around 20%, and this is despite the weak revenue coming in for Page Industries. But the drop in the distributor level inventory levels, that also is adding to their bullish stance. While on the other hand, on Aditya Birla Fashions, they have given an underweight, and they say that the share price that is expected to drop with respect to Nifty over the next 15 days, and this is because the Q2 was quite weak for the core business as well as TCNS clothing. The festive demand, however, that will show some uptick on a sequential basis, but they believe that the weaker balance sheet that is expected to impact the stock price going forward for this. So that's the tactical idea coming in from Morgan Stanley. Keep a watch on these two stocks.
Absolutely. So that's Morgan Stanley on Page Industries and AB Fashions. But let's shift focus to Jefferies, because Jefferies has released a bullish note on Coal India. And Ashesha is here. She's joining in with more details from that note. Good morning, Ashesha. What are you picking up?
Well, yes, Coal India has reported better than expected set of numbers. Revenues have seen a jump of about 10% on a year-on-year basis. Margins have also come in ahead of what the street was working with. Company has reported margins at 24.8% versus 29.2% that the company had reported in the previous quarter, but much ahead of what the street was working with. Remember, e-auction volumes were on the higher side, and that is what aided Coal India's numbers this time around on a sequential basis. Now, Jefferies has come out with a note where they have upgraded the stock to buy from their earlier hold rating. They've hiked their target price from 240 to 385. Jefferies says that volumes offset the impact of lower e-auction prices and higher staff costs in the second quarter. They also say that volume growth trajectory has improved and is likely to sustain at elevated levels in the second half of the year amid India's rising power demand. Jefferies has gone ahead and upgraded their FY24 to FY26 EPS estimates anywhere between 18 to 42%, and they also believe that the valuations are pretty attractive. So for now, they've upgraded the stock to a buy rating with a revised target price of 385. So on the back of strong numbers that Coal India has reported, along with an upgrade that has come in from Jefferies, Coal India will be in focus today.
Yes, Coal India will definitely be in focus today, but that's all the time we had on this edition of Market Cafe. But stay tuned on the channel as we catch all the action on the market. For now, it's a goodbye from me as well as Snehi.